Welcome back to another Idea of the Week. I'm your host, Dave Townsend. As always, joined in the studio with Denny O'Malley. We'll get to him in a minute. My special guest today is Brian Stutland from Equity Armor Investments. He's our Chief Investment Officer. Brian, we've been talking for some time now about chip stocks. Obviously, it seems like for years we've been talking about this now, and it always keeps bubbling up. It's still top of mind. So we brought you on today to discuss an investment thesis around chip stocks. I know your friends at CNBC are kind to you, and they let you give an investment pitch without any time limit to it. But we're gonna hold you to a different standard here, and we're gonna call this, the new segment is the elevator pitch. We're gonna give you a minute and a half to sell me on why chip stocks is an investment thesis. I guess it's part of the spirit of baseball now has a pitch count, so why the heck shouldn't analysts? So you ready, Brian? Welcome to the show as always.
Yeah, sure. Let's go.
All right.
So when you look at the chips, you mentioned them that they've had a bit of a run up here, obviously, over the last couple of months. They've sort of been the leaders in the market. And, when you look at like the NASDAQ and the S&P, NASDAQ up almost 20%, S&P up 7%, the chips have really led the way. And the reason really being is there's a couple things going on fundamentally behind this. Number one, you look at sort of it's a defense play, and defense meaning defend our country, defend our manufacturing business. And there's really been, an adamant play both from the president, the administration, and the previous administration to really start to move manufacturing back here, secure areas of need such as chip manufacturing here. And so that sort of created a little bit of a supply chain issue and will continue to do so. So the demand will be there for some of these chip names to sort of lead the way. The other area too that's been really the big thing behind a lot of this is artificial intelligence, AI. We've heard that buzzword. We've heard about what Microsoft is doing, what Google is doing. But as this starts to expand beyond just like search and chatbot, there's a tremendous amount of data that's going to be required in computing power. And there's a couple chip names out there that will continue to lead the way in sort of that area. And I think semiconductors is a sector sort of the market I want to be invested in and have at least an overweight segment to that, because I think there's still more upside to go. So a couple names I really like on top of that board: NVIDIA, AMD. NVIDIA has a little bit of a crypto play involved in it. So not only do you get the video aspect of the chip side of NVIDIA, it actually tends to track really well with cryptocurrency and the movement of that. There's a very high correlation. And then AMD, on the other hand, huge balance sheet. We like big balance sheet companies in this environment, whether there's a recession down the pipeline or interest rates continue to move higher. This sort of like stagflation-y type environment plays well for big balance sheet. And AMD, analysts predicting cash flow, just free cash flow, to double over the next couple of years. So AMD is another name I like leading the way, and that's a sort of an area, those two names I like in the chip segment.
All right, I'm sold, Brian. I'm interested. But getting started with structured notes can sometimes be a little bit clumsy. We brought our expert on all structured notes, all things structured note, Denny O'Malley. So Denny, any ideas how to get started with this if we want to make an investment in a structured note linked to chips play?
Absolutely. Thanks, David. So yes, there's a ton of potential for using a structured note to get a bullish stance on AMD and NVIDIA. There are a few different ways to do it, but we're going to specifically highlight something called a memory income note. But first, there are 4 components that all structured notes have. So let's cover those 4 components first. First, you have the underlying assets. In this situation, you have AMD and NVIDIA. You have a term to maturity. In this situation, 3 years. And then you have your payoff and your downside protection. First, the payoff side, you have a 24% annualized yield. And those yields are paid quarterly via a normal bond coupon. On the downside, you have a 25% protection that applies to both the coupon payments and the principal. So this means that if AMD and NVIDIA are both above negative 25% in 3 years, you're going to receive a full 72% yield as a total return over those 3 years. Very important note to this is that if there is a short-term period of volatility, there's the potential that some of the coupons won't be paid. However, with these memory notes, those missed coupons are remembered, and if the underlying assets, AMD and NVIDIA, recover from being below that negative 25% return, that's full 72% will be paid at maturity. So obviously, if you're concerned about any short-term volatility, this will eventually pay off as a long-term investor. definitely reach out to us at Halo, and we can explain the nuances of that even further if you would ever need that.
All right.
Back to you, Dave.
Yeah, thanks, Denny. Brian, I know we've talked about this at length, the downside protection in particular around this investment idea. I'll give you the closing word.
Yeah, I mean, the trade that Denny lays out is really interesting to me because when we see stocks like these, like in the semiconductors that have already run up a bit, and I'm a little nervous to sort of get in after this run up, this type of income note really provides that leverage, so to speak, in the sense of being able to collect some income while I sort of wait to see how the area of the stocks that I'm invested in play out. And so having that downside protection of 25% really makes a lot of sense with some of these names. The reason being, when you look at AMD, it sort of broke out from $70 a share sort of a couple months ago. And since then, it's really climbed up. Now, there's still probably some room to the upside, but I think there'll be some resistance around the $120 level. So I believe AMD probably trades in this range of 70 to 120, but there's still some upside here in a name like this. So taking in some income at this level really makes a lot of sense. And then you look over at NVIDIA, somewhat of a similar story. It broke out from sort of a head and shoulders technical bottom back up above $200 a share and now trading above 230, where it had previously broken down back in 2022 below that 230 mark. It's now above that neckline. So I see at least some support down in that level. So now I've given myself enough cushion to the downside with the 25% soft protection. These are names I want to own, so I'm okay, sort of having that soft type protection where I would experience downside risk to these names. But I might think, hey, these stocks have run up a bit. I don't know how much upside there really is if they're just going to continue to take off, but I think there is some. And then if I get that yield, that component of nearly 25% a year, collect 72% return on my money, that's exactly what I'm looking for in this area of the market, sort of a high-risk semiconductor chip type name. I get that risk, but at the same time, I'm also sort of limiting some of that risk by giving myself that protection to the downside. So I bring in that income. It's a great way to sort of round out a portfolio, get exposure to the chip sector while sort of diversifying into these sort of liquid alternative type investment strategies, which I really do for clients myself and their portfolios as well. So this makes a lot of sense to me, and I like NVIDIA and AMD, obviously, our two leading names, of course, on the top.
All right. Well, thanks again, Brian. We always appreciate your time, and we encourage everybody to check Brian out on CNBC's Options Actions on Friday. We'll look out for you there, Brian. And until the next trade idea, thank you again for your time.